So there was a story that caught my attention on the Bloomberg. It was about how New York City's luxury real estate market got really battered last year, or this year, I should say. Contracts signed for homes in Manhattan priced at about $4 million or more were down about 16%. Total value of those deals sliding to $7.65 billion. It was the lowest level since 2012. This is according to one report that's out there. So let's talk about the market. Let's talk about high-end real estate. Diane Ramirez is CEO of Halstead. She joins us in our Bloomberg Interactive Broker studio. I have to say, I do, beyond like business news overall, I love looking at the real estate markets in terms of various cities and what's going on. So 2019, it was a tougher year.
It was definitely a tougher year, and especially in the luxury arena.
Was it overbuilding, Diane, or what?
I think it was a little bit of the overbuilding, but it really was more prices just got too heated, and buyers just said, enough, we're not paying that. So it created a great hesitancy. And then hesitancy and more building, supply and demand happened. So it was a slow correcting market, especially luxury.
Are we seeing any of the buildings slowing down? Because I'm like kind of amazed as I travel around the country, especially in some of the major cities, that there are cranes continuing to be everywhere, and that I do feel like there is older, younger populations. Everybody kind of is moving back to the cities. So tell me what we're seeing in terms of new properties coming on the market.
Well, the luxury is, I believe we're at the tail end of, in New York City, the tail end of the uber luxury buildings. Most of them are built, and now it's I hate to say affordable, but it's not the $100 million properties. So I think we're at the end of a lot of building, which is going to help with the inventory.
What is your anticipation for what 2020 looks like? So then if it helps with the inventory, I'm assuming then it kind of provides a little bit of a shore or bottom, if you will, in the market and help to shore our prices for 2020. What are your expectations, though?
I think the expectation is we're going to have a more balanced year. And we have what I have not seen in my long career. It's like a trifecta. The purchasing power because of interest rates are amazing. You have the correction that's been going on for well over a year in luxury. So you have the sellers, even developers, poised to make deals. And buyers have choice they have not seen. Think of the years when, there's 2 apartments quickly today, buy the one that you can. So I think we're going to see a very good 2020. Your smart buyers are already stepping up to the plate, and we've seen great business November, December.
Who are the buyers? I mean, I think for a long time too, Diane, that the story was a lot of foreign buyers coming into major cities. Certainly it was a story in London for a lot of different reasons. But that was true also the case here in New York. But who is your typical kind of buyer of a high-end, apartment at this point? I mean, obviously we talk about the financial community, and that makes a lot of sense. But who is it that's coming in and buying?
It's anyone that has wealth. First of all, they want to own something in New York. And why not get a real jewel? So it's New Yorkers, it's local, it's the tri-state area, it's across the country. Anyone that wants a piece of our great city.
Did we see any of that? I think there was concerns when we got the new tax overhaul legislation, tax reform, if you will. But, the blue states really got hurt in terms of property taxes. And I think there was an expectation that a lot of people were not going to be buying into New York and they would be fleeing the states. Have you seen any signs of that?
You're seeing a little bit because the taxation, and we have to really watch that to keep this city great. We really do have to keep an eye on that and keep the balance fair. So initially everyone pushes back, but in the whole scheme of things, if you want to own a home, it's a little bit more of a cost of owning.
Right, and there's still a lot of people who are working here and they want to live here. And
That's
you
right.
certainly see it.
That's right.
What are some of the trends that we're seeing in real estate? I do, it's really fascinating to kind of walk around. You've got, your Upper East Side townhouses. You've got great brownstones, certainly on the west side and really around the city. You've got a different feel if you're downtown in terms of some of the high-end properties. What is it that buyers are looking for? Are we, we've seen it on the office side where, Bloomberg, we're an open space community, and you see certainly a lot more corporations, if they're redoing their office space, this is what they're going for. It's not everybody has an office anymore. It's the open environment. What is it that people are looking for in a home?
You really hit the nail on the head when you said not everyone has their own office, especially your younger buyers, the millennials, and the ones that are married and having children and really wanting to settle down and own. They are not looking for square footage and space like we did a couple of generations ago. It was like, how large was your house? It had to be a fantastic square footage. They're looking for functional space. They're looking for it to be a smart property with the technology. They're looking to be close to their work, or if they're moving into the suburbs, closer to town, so they're near the restaurants. They're really not looking for space for space.
That's really fascinating. So it's the amenities, whether it's technology. Exactly. I also do wonder, certainly in the technology community, we've talked so much about the importance of ESG, right? Environmental social governance when it comes to making investments. And I do wonder, I have a 16-year-old and she, will talk about the impact on the climate and so on and so forth. How much of that, a greener building, how important is that to you when you're talking about high-end real estate purchases?
Yeah, they're looking. It's a social consciousness of all. And lots of times we're learning it from our children.
Yeah.
And really making us aware that this is important. It's for them. So yes, that is, everyone is looking for making certain it's a green building, and in the older buildings, just making it as functional as possible.
When you look at some of the real estate stories that are out there, and of course we're talking so much about New York City, Manhattan specifically, but there's so much going on in terms of Brooklyn. We had some interesting stories on the terminal this year that talked about New Rochelle and Yonkers, what they are doing to try and lure millennials who are looking for, some of those who do care about the square footage, but looking for bigger but not so expensive, but still with the convenience, to the city, even Jersey City and across the water here, across the Hudson. What are some of the interesting real estate stories that are catching your attention that you think might pick up some momentum come 2020?
It is. And I'm so delighted to see the millennials getting back in. But
they do buy properties.
They do buy, yes. Are you hearing that out there? They do, and the smart ones especially are buying. But that is what they're looking. They're looking for, and that's why towns like New Rochelle, it's close to the city. It's convenient. There's a feeling of a town. There's a feeling of life, where, again, a generation ago, you'd go as far out as you have to get a bigger house,
right?
And yet it was dead. The roads rolled up at 8 o'clock, and the younger generations, and even the older ones that want to size down, are looking for living somewhere where it's exciting and they can do things.
So what does this all mean then for the suburbs? I mean, have people turned away from it dramatically, or do you still see, if you're in a suburb near a major city, it's still in demand? Because I remember, there's been several stories, I feel like, too, over the last couple of years about properties in Greenwich, as a lot of the financial community and a lot of corporations have moved out of the state, that has been, certainly a market that's been hit.
Yes, it's a challenge, and especially the larger homes, or for instance, in Greenwich, one that's 20 or 25 minutes away from town, even though you're still in Greenwich. And I think how that will change is that it will become a pricing issue. Those homes that used to be very, very expensive will just become a little bit more value. So you'll lure the people to the spots that maybe is a little further from town, but great value. And I think that's how it's going to play out.
I said to you when we kicked off that, I do love talking about real estate because I feel like we're going to have a guest later on who's going to talk specifically about the home builders and also about the financial community. And I feel like those are two sectors that can tell you a lot of what's going on in the broader marketplace, in the broader economy. So I think it's a great indicator based on what you're seeing in terms of people coming in, wanting to look, what they're willing to spend, what they're doing. What kind of confidence are we seeing out there? What does it tell you about the broader economy?
Right. I think the confidence is there, and much more so than even 3 or 4 months ago, because I think everyone is realizing the economy really is good. There was always, there was word of recession and what will next year, and maybe it'll
a
be
year ago
prices
this
time
the market was selling off.
Exactly.
There's a lot of talk about recession.
And everyone thinking, oh, well, it will be cheaper next year, so let me wait. And now they realize it is what it is. The values are great. Your purchasing power right now, because of low interest rates, are amazing. And even your luxury buyers who used to, by and large, buy all cash, I'm seeing them even say, let me get a mortgage. I'll keep my money in the stock market. I'll have both ends playing for me. And what better time?
That's funny that you say that, because there was another story, I think it was just in the past week, that talked about how people typically, these high-end real estate buyers would often be a cash deal, and that because of the low rate environment, they don't have to do that.
They don't have to do that.
Yeah.
Have both sides working for you. It's perfect.
As a result, do you have, because of this low rate environment, and it seems like it's going to stick that way, do you have a lot of people saying, you know what, this is a time for us to trade up a little bit?
You're seeing it impact everyone. It's get in the market, trade up, or even trade down. It's very alluring when you see it's almost free money out there, not to take advantage.
Yeah, it's unbelievable that these rates have stayed so low, and there's expectation certainly among our economics team that you're going to see certainly low rates continue in 2020. Diane, thank you so much. Happy holidays.
Thank you. Same to you, Carol. Enjoy being here with you.
Same here. It was nice to check in. Always something that fascinates us, and it's always, whenever there's a real estate story on the Bloomberg, it's usually among the most read stories. Everybody loves to read about it. Diane Ramirez, she's chairman and chief executive officer of Halstead, joining us in our Bloomberg Interactive Brokers studio with a check on the real estate market.